All right, Hefty here, 492W, talking about CPD number 7, where we're doing generating revenue. Going to finally try to focus on how to make some money and financial management. All right, with some key points from the textbook. What we want to do is start to figure out what is your number one revenue generator for your business. Now, the book doesn't talk about this, but this is a term I use. I'm an old farm boy from the Midwest. What's your cash cow? What's the one that's really making the money consistently? Maybe it's the one that's making the most money. Hopefully it's a combination of the two. Then anything after that we talk about as additional profit centers. Textbook from a fitness facility talks about having maybe your sports performance for baseball, high school baseball players is your number one revenue generator. But then you also have fitness memberships for the general population, and that's just an additional profit center. Not your number one cash cow, but additional. We'll talk about cash versus accrual accounting. For budget purposes for this class, this is real important. They're going to talk about a bunch of different types, but the simplest one and the one we'll use for this course when you're required to have a budget is called an income statement, which is simply you list the revenue, all the money you're making, different forms of that, number one revenue generator, then your additional profit centers, and then you subtract all your expenses. Taxes are included with that as an expense, and then that equals your net income. Big one you're going to need for projects is you need to add tax considerations when you start to define your business. We've talked about the 4 different types in the course at the beginning, but now you want to also be able to identify, add to that by defining what it is based on tax considerations. There's 5 different types we'll talk about for this class. Again, most of you will be what's called an LLC, a limited liability company. When we go to health law ideas with revenue and finance, again, what future changes will have an impact on small business finance, okay? So we want to look in the economy, but we also want to look most importantly into some of the health insurance law and how it's impacting you from a revenue and finance standpoint for your business. Good example is the health insurance exchanges from the Affordable Care Act, and then also the expansion of Medicaid. Again, you can see some quotes here which just talks about some different impacts. Again, the individual mandate, we've talked about that, where you were required to have law in 2014-15, but that was repealed then in 2017. So take those considerations, do some research, and see what impacts it will have on your finances from a small business standpoint. So again, when we're talking health law, it's about stabilizing your health care. And then the other quote goes into capital building framework. More importantly, the number of persons, again, you as an employer want to sponsor your plans, meaning are you providing benefits, are you not? Is Medicare rising? Is it decreasing? Medicaid? Again, what is changing the structure of health law as it's creating different financial pools or revenue pools in our health industry. So again, what future changes, what impacts it's having on you as a small biz, and then 2 key components, health insurance exchanges and expansion of Medicaid. When we get into business finances, how to use that, the class, you should have your budget, and your finances helps you act as a guide to start your business. So number one form of quality control ends up being your guide in year 1. Again, for the class, you can decide where your business is. It can be in year 1. You're just forming it. That's what most of you will do. But you can decide it's in year 3 and 4, where typically that is the years where you actually start to turn a profit and start to make money. Again, you want to base your budget on a fiscal year. It's 12 months. The difference between a calendar year and a fiscal year is fiscal year is when your business is a start and stopping point. So a good example is instead of January 1 for universities, July 1st is the start of the fiscal year because, again, we get into preparing for the fall term, the spring term, which is the cash cows, and the summer is additional profit centers. Is it best to be conservative with sales? Yes, and revenue generated estimates. So again, you've got monopoly money, but you want to go ahead and be conservative with your revenue, the money you're making, and then be a little more liberal with your expenses when you list that. Again, a budget is just simply a financial plan indicating expected income, that's your revenue, and expenses, and that becomes your net income. That's the income statement we're talking about. All right, for budget development for the class, you can see there's 4 different types here, but the one that you're going to use is a zero-based budgeting where you're establishing a budget based on the goals for that 1 year. Again, you're going to do a 1-year income statement, and then again, you're going to base it off of those goals we talked about in the beginning. Use this for the course. There's 3 other types. You want to know what those are, but they're not as applicable for what we're doing. So your budget prep, you want to, again, it all comes back to research like we talked at the very beginning of the class. I consider the W course component definition is research focus. So again, gather tons of information. Your site visit, meaning your research you're doing for project 5, benchmarking other businesses is a great way to get some ideas. Just how they do their budgeting, not necessarily going to give you any numbers. Again, number 2, forecasting sales. So you want to look at, do some estimates on what your revenue is going to be. Again, go back to that cash cow. You got to go and list all your different expenses. The book gives tons of examples. They're pretty simple. Number 4, projecting profits and losses. Again, look at that from month to month. There's differences, obviously, in different times of the year for different businesses. Compare them against the industry norms. That's the benchmarking. And then, again, determine capital needs. What we'll do, the only one here, is really talk about you should be able to know what are your federal, state, and local taxes, determined on where you put your business. And then step 7, what's the connection from revenue and finances with the Affordable Care Act and considerations from a legal standpoint. So 1, gathering the money, you're just going to do, or gathering the information. Again, this is that benchmarking. Here's some great sites. Small Business Association is going to be one of the best ones you can use. Some local stuff. Here's one right here with Pennsylvania. And then lastly, as I said, Small Business Association, SBA.gov is outstanding resource. Click on that and you're going to see tons of great places to start with your research. Forecasting sales, again, we want to talk about figuring out what is your cash cow and then listing those other additional profit centers, and you want to break this down for 12 months into 1 year. Again, projected yearly assets is what this ends up being. Forecasting expenses. Again, you've got fixed costs. Again, the book shows some examples, but one more time, rent, utility, so forth, technology, salaries. Some variable costs, they can change from month to month. It's just your cost of goods, customer service expenses, different things like that in your marketing. Rules of thumb here, you should follow. Double your estimates for your advertising and marketing costs, triple your estimates for legal, insurance, and licensing fees, and you would keep track of direct sales and service time. That actually is part of your expenses. Good example is when the Affordable Care Act started, there was all this additional paperwork that needed to be on, and hospitals then had so many more billable hours that became a huge expense, just doing all the paperwork for the Affordable Care Act, one of the cons in health law, Affordable Care Act. Number 4, projecting profits and losses. Again, when you develop your income statement, real simple here. List all forms of revenue, cash cow and additional profit centers, then list all your expenses, and then with that you need to include taxes as an expense, and then that becomes your net income. Very simple. Step 5, comparing industry norms. Again, this is the benchmarking we talk about. You want to go and see what good people are doing, what bad people are doing, and again, be able to learn from both of those. Again, the research from that site visit, which we're calling Project 3, is the research and analysis. If you can interview somebody, that's awesome, or email, but a lot of the research is going to be right from websites, which is a lot of quality information right now. Again, you should have a finance person in your business for you. It's going to end up being you. Determining your capital needs or your net worth. This just means assets and liabilities. And assets, just everything you own as a business and a liability, or as an individual. And liability is everything that you have like an obligation to, everything you're going to owe. So taxes is what we're going to focus on here. Again, we'll show you towards the end a great site where you can see, based on where you put your business, what the federal taxes are, state, and then local. All listed as expenses. Last, when we get into taxes, then you want to determine what type of business you are. And this you have to add to the definition of your business type. Again, there's 5 types here. Most of you will use a limited liability company. This is not in the textbook, so this is a key component to add. You must include in Project 4 at the beginning of your business design. So sole proprietorship is really what you end up doing is you're the owner of the business. The negative here is then this comes out of your own personal income tax then too. Partnership. Let's say you and I are partners in the business, but again, same thing. We're going to go ahead and put this on our personal income tax. A real negative with both of these is if you are sued by a client, they can not only take all the money of your business, but if they have what you owe them, and let's say you were liable, they could start to take all your personal property to pay for those. Corporation, we're not going to use this for the class because it's so complex, but again, you have shareholders. That's what makes it unique to business designs tax consideration. An S corp is basically just a way to avoid double taxation. Again, we're not going to use this for the businesses here in the class, just because we're doing small businesses to keep it simple. It's a form of a partnership and a corporation at the same time. Most of you will use a limited liability company, and you ask, why is that? Why not just be a sole proprietorship? What it does here is now the business and you are separate, and so your taxes, your business doesn't get taxed on your personal taxes, but then also the limited liability is you have coverage so that if you are sued by someone now, they cannot start to take from your personal assets. So income statement workshop here real quick. You want to start to do these steps, pause it, determine what kind of business you are first. If you are the LLC, then again, do some more research so you clearly understand what that is. If you want to pick one of the others, then again, do that research. Then you want to go ahead and just list all your different forms of revenue, cash cow first, then additional profit centers. Then list all your expenses, fixed and variable as we talked. And then lastly, once you know what type of business you are, again, I'm using the example of an LLC, what would be your taxes? You want to start to think about where you're going to put your business. Great site here to start to get some of that information too.